What's that noise?
What's that noise?
I think you have to mute yourself on the Instagram. That's not me, is it? Well, mute yourself on Instagram.
How do I?
There we go.
There we go.
Yeah, there we go. Yeah.
What's going on there?
Yeah, mute yourself on Instagram and you should be fine. Yeah, that's it. Yeah.
There we go. It's not like it
Yeah.
for some reason.
Wait. They won't be able to hear you though, would they? Wait. How are we going to do it in terms of the... Wait. What was that anyway? Wait.
I think it's something to do with the mic or something.
Oh, it sounds like a fire alarm.
It did, didn't it? If I'm able to join the live from the thing.
Mm-hmm.
Yeah, that's really confused me as that.
I'll create the live again.
Yeah, go for it. Let's see.
Because we want them to hear us from this, right? The Instagram, but you also the YouTube as well. They need to hear you. So I don't know how.
I'll put my earphones in and see if that does it.
Right.
Hopefully it does. I don't see why it wouldn't do. It's all a work in progress. There we go. So I've got my earphones in now. So hopefully.
Just title, value, listing, unleash. Can I actually? Should I go live now?
Yeah, go for it. Let's see it.
Right.
Yeah, we're live on YouTube as well, so
yeah,
go for it. And hopefully, maybe it's because of the headphones it can't handle.
Yeah, I invited you.
There we go. Is that better?
There's no echo, right?
No echo. Amazing.
Right.
We solved it. You got to have earphones in, headphones. They won't echo.
All right then. So you start. You're the host.
Right, let's get into it. It's Value Investing Unleashed, live on YouTube and live on Instagram. Doing both at once. We're going to talk everything value investing. And today we're going to talk about Facebook stock crashing 25% last week. And today it went down even more. So it's something cool to talk about. And we'll just answer any questions we've got from YouTube, Instagram, and we'll just go with it. So,
all right then. So what are your thoughts on the whole Facebook crashing 25%, 30% this week?
Well, to be honest, it's absolute music to my ears. If I just get Yahoo Finance up, we're talking about, I think it's a 16 PE now. So in terms of Facebook as a business, nothing has changed fundamentally. Earnings came out, and I think they missed user numbers by. They went to get 1.93 billion user numbers, and it was 1.92.
Yeah, it was something dumb like that. It's not
something
even a lot,
crazy.
is it?
Yeah, and it wasn't even the actual profit figures because the profits was fantastic. So yeah, there's not really much to say. Well, there's a lot to say, but it's just classic market, just
Yeah,
exuberant or to the upside or exuberant to the downside.
yeah. So should someone be overreacting now, like panicking, like the stock's going down? Should someone be panicking, or like what's the mindset in terms of like dealing with this situation?
Well, as soon as it dropped, I bought more. So I doubled my allocation in Facebook.
Mm.
A PE of 17 for Facebook is ridiculously cheap, in my view anyway, based on the quality of the business. So if you hold Facebook stock and you are down a bit, if you can't handle the downside, then you don't deserve to handle the upside. So
Yeah. So when Facebook tanked for me, the first thing I did was actually I looked at what was said during the earnings call. Then I thought it was an overreaction. So the next day, I actually doubled down on my position. So now I think I'm kind of like overweight. I think it's like 20% already. So my next like thing I'm gonna do is just wait. Hopefully, it gets to 200. Then that
yeah,
could put my average down to like 150. And if it does get to 150, I'm probably just gonna hold for a bit because that's just my aim really. But yeah, I got excited when it fell. Actually, I was like texting everyone that Facebook's down at 24%, and yeah, and that's it really. I mean, it's a good company. I think over the long run, it's gonna be fine. It's just the short term like situation they're going through, like all companies. But the market, I think, overreacted on that. But yeah.
yeah, 100%. So what we're at now, I've got you finding so close for speaking. Currently at $226. P ratio trailing 12 months is 16.4 for Facebook. Honestly,
Yeah. Mm. But my portfolio is getting killed right now because I have Baba as well and Facebook. So, after that short term pain, to get the long term gains. So hopefully it works out.
yeah. Well, I know yourself. You're quite heavily invested into a few stocks, so that means you will have more volatility, and that's something you've just got to
Mm.
accept at the end of the day.
Yeah, yeah, that's true. And also, I have like 10 cent as well, so that's even more volatility in my portfolio. So I have 10 cent Baba and Facebook in one portfolio. So it's going to be rough in the short run, but in the long run, I'm going to be sorted, I think. I mean, Facebook is the new Baba. I mean, last year it was Baba. This year is Facebook. Like, I think everyone's saying like Facebook's gonna take themselves off Europe. Facebook is gonna be split up. So it's literally like the same thing what everyone was saying about Baba, but to Facebook. So I'm not really, you know, like
It,
phased by that.
yeah, if Facebook got below 200, I don't know what I'd say because the P ratio then would be below 15, wouldn't it? And that would
Yeah,
be
I think
absolutely crazy.
yeah, for a
So
company that's growing that fast to be below 15 P ratio is just ridiculous, to be honest.
yeah, it's just about sentiment, isn't it? Like Alibaba 18 months ago, over $300 per share. He
Mm.
couldn't do anything wrong. And then, things come out about the Chinese regulation, yada
Mm.
yada. And then boom, it's more than half. So
Mm.
this is what happens. Negative news comes out, and you're just going to take advantage if you think the company's worth more than what it's trading for.
Yeah, I mean that's how you get bargains, really. Like you just wait for that one event to cause the stock to crash, and that one event for Facebook. I mean, it was already cheap, but to get it this cheap, and to get it this cheap is crazy, and it had to take an earnings miss. So yeah, you have to get bargains by just waiting for that perfect like news to come, and the stock just
Yeah.
falling.
Well, if you look at Facebook as a business, the financials that came out were for the year ended December
Mm.
2021.
Yeah.
So this is a business that in 2021 had 818 billion of sales, and in
Mm.
2020 it had 86 billion.
Mm.
So a P ratio of 17, or well, I say maybe not 17, but anywhere from 12 to 17, you're talking about a stagnant business not really doing much.
Yeah.
So Facebook doesn't deserve that, does it? Let's be honest.
No, it doesn't. No, no. And I think if you're purchasing Facebook for the first time at this valuation, I don't think you have anything to worry about because say they grow like 7%, 6% here till like 10 years time, you're still going to be sorted. You probably get like 10,
Yeah.
12, 13% return. So I think if you own Facebook now, you literally don't have to worry about anything, to be honest. Like you still like make average 10% return based on this, the current cash flow.
Yeah, no, 100% agree. Stock Akin, Meta financials were good. They weren't bad at all. The
Yeah.
company showed 33% profit margins. So for every $1 sold, they made 33 cents of profit, which is very, very good for the size of the business, and it's still growing.
Mm.
Yeah, in my eyes, I'm happy. I get to buy shares
Yeah,
at a lower price. So
exactly. I think when I first bought Facebook, I bought it at my average was 314, and
yeah,
now my average is 270.
you see,
So
I bought some at 320, and I thought it was still a good deal. So
mm,
when it got to 240, I was even happier to buy.
well, what's your average now then?
Oh, I'd have to look at the spreadsheet, but it's probably like maybe 250, 260, something like that. So
Okay,
yeah, I'm
that's
still
pretty
confident
good.
of a 10% return plus
Mm,
yearly into the future. So that's my goal for when I know your discount rate's like 15%.
yeah.
I'm happy with 10.
Mm,
But I know each for own, I guess.
yeah. I mean, we all have discount rates, to be honest. Different discount rate. Like you think you think the risk of Meta being broken up is a real one? Do you think that?
I personally don't. Um, I think it's all news.
Yeah.
Just got to remember in the 1990s, there was big threats that Microsoft was going to get broken up because very big antitrust. There was in Bill Gates was in government, giving speeches and whatever. Zuckerberg has something similar. It happens every decade. There's a big company that comes along and threaten to break it up. You could say
Mm,
that about Amazon. You could say it about Google, but
yeah.
what benefit does it really have by
Exactly.
breaking them up? So yeah,
So when I was reading the earnings, like, did you read what like Zuckerberg was saying, like what he was saying about the competition and stuff like that?
to be honest, I didn't really dig deep into it. I looked at the numbers, but I didn't dig
Mm,
deep into the transcript. I need to listen to it, to be honest.
yeah.
There's an app I use to listen to earnings calls,
Mm,
so I can listen to it like a podcast.
yeah. So when I was looking at what Zuckerberg was saying, like a lot of people are saying like it sounds like over exaggerated the way he mentions TikTok so much. He mentions Google. He mentions like Apple. It's like a lot of people are saying like it's like he wanted the stock to go down in a way, so
Yeah,
he can buy back shares good at, um at a good rate. But and I don't know. A lot of people are saying that because the Monish Prabhai said monopolies don't really like to admit they're monopolies. Like the other month, like Tencent's owner, he never speaks. He literally doesn't do anything. He came out and said Tencent is what did he say? Is replaceable,
yeah,
and Tencent is it's going to be very hard for someone to come and like knock Tencent off their perch because they literally own like everything from gaming to fintech to social media. Um, for Zuckerberg to just come out and say, "Oh, like Google's coming after us, like TikTok," I don't know, like are they really? I mean, I get Google, but TikTok, I don't know, to be honest.
I personally don't think so.
Yeah.
Imagine a world without Facebook.
Pinterest is the competition. I was actually thinking Facebook should acquire them, but they're not allowed to.
I think it'd be a bad acquisition, to be honest. I would be happy if they did.
Mm,
I don't know if you've seen, but we was having a quick chat earlier about Pinterest and how PayPal, there were rumours about them. Just no. That would be an awful deal.
The risk of Meta being a value trap is there. You think it could be a value trap?
I personally don't. The company is
Mm,
very profitable. It's got barely any debt, if any. It's got no long-term debt. I think it's got enough cash to pay all of its current liabilities. So you're basically
yeah,
saying the business, it's impossible for it to go bankrupt.
yeah.
I don't see where the growth stops in terms of revenue because, sure, maybe they won't add many more user numbers, but that doesn't mean that the revenue will just stop growing. They can increase the prices on advertising. They can get new revenue streams from the reality labs, aka the metaverse stuff, which is a cherry on top, to be honest, for the business. Yeah, it's just overreaction completely. Think about Apple and iPhones. How many more iPhones have been sold each year? There's going to be a limit to it. So that's the way I see it. And Facebook's got a business where 1/3 of the people in the world are on Facebook, Instagram, or WhatsApp. That's a big deal. So yeah.
I don't think I could imagine life without Facebook, Instagram, or WhatsApp. Like, I mean, I don't think I could imagine that, to be honest. Like, they just got a hold on like everything. So I think Facebook will be fine over the long run.
Yeah.
Like, they haven't monetized WhatsApp yet, have they?
Yeah, that's another thing I was going to bring up. They haven't managed to monetize it, but they've got 1 billion. I think so. They spent 1 billion on Instagram. They spent about 18 billion on WhatsApp. I don't know how WhatsApp can be monetized, but if anyone's going to do it, Facebook will be able to do it. So yeah, I'm not worried in the slightest, really.
Yeah, maybe they could use it for, like, business owners can use like WhatsApp to do something with it. Maybe monetize it in that way to make it more like for business people. I don't know, but yeah, there's a lot of people using WhatsApp, to talk to people across the world. So yeah.
Yeah, no, I think it's an exciting time just with Facebook. If you're into Facebook stock and you're wanting to buy more, at current valuations, it's looking exciting, to be honest. It's looking like a proper value pick at the minute.
Yeah.
So yeah, we're big fans of Facebook. That's for sure.
Yeah, definitely. I think Crenshaw has Facebook as well. He recently bought it, so he's lucky. The Libra crypto project. What do you think about Facebook dropping the Libra crypto project?
I don't really know, to be honest. Wasn't Libra going to be the currency of Facebook, where Facebook would link it to like a load of world currencies or something like that? Yeah, it's like it failed before it even started. The regulators just said, no, you're not doing it.
Yeah.
Pretty much. And that's going to happen to any of the big 5 companies. They're going to get scrutinized if they acquire anyone or do anything a bit out there. Facebook, Google, Amazon, Microsoft, Apple. If any of them want to acquire a business or have a new funky project, they're going to struggle because they're in the eye line of the regulators, the government, basically, because they're so powerful. So
yeah.
But I don't think Facebook needs Libra. It doesn't need Libra. What it can do now, it's got 1/3 of the people on its platforms. I just don't see how it disappears.
Do you think any of the super investors will buy Facebook? Because currently only Lilu owns it. He owns a small position. Do you think he will double down? Do you think anyone will open a new position in Facebook?
I think if it gets to a good enough valuation, 100%,
Mm,
100%, just because of the quality of the business.
mm,
Yeah, you look at the profitability, how little debt it's got, the return on equity.
mm,
For me, based on the
mm,
financials, it's a no-brainer. But it
mm.
is interesting because I don't know if you do this, but I do go on datarama.com and
Yeah,
Well
yeah.
Wisdom because I like to know what the super investors are invested in, be it Seth
Mm,
Klarman, you know, Mr.
mm,
Buffett, um,
mm.
all of them. You know, Bill Ackman's one of my favourites. I
Yeah,
find it interesting what they're investing in. I
yeah,
don't copy, but
yeah,
you know,
yeah. It's
it's
interesting to
interesting.
look at. Yeah. Um, I wouldn't be surprised if someone like Seth Klarman picks it up because he currently owns like Google, Intel.
Yeah, he's got the position in there because I had a look today.
Mm, mm.
So
I wouldn't surprise if Buffett picked up Facebook. To be
I'll tell you
honest.
what, it's not something he'd usually go for, but if it gets to a valuation, which makes sense, one of the managers at Berkshire will look into it 100%
Mm,
because what they've got is they've got hundreds of billions in cash, and
mm,
every year they don't invest it, it's getting worth less. So a couple of billion, Facebook, it's a no-brainer.
mm. I mean, he could just do the double whammy and just buy Facebook and Alibaba in one quarter. Imagine that. I mean, he has the cash to. So,
That would be interesting.
is Mark a lizard? What?
Gosh, have you seen the photos on his jet ski?
Yeah. Yeah. Um. Any questions? But apparently Alibaba is down again. It's
Oh,
down like
really?
6%. Someone told me. I didn't even realize it was down until someone told me. Apparently, SoftBank is selling their stake in them or something.
Well, SoftBank own like 20 odd percent of them, so I don't know
Mm,
why they'd sell at this price.
mm,
Hmm. Maybe they need the funds for something else.
probably. Oh, hello, Jack.
Hey, Jack. Jack's a crypto bro.
Who is it?
Yeah, I'm just checking YouTube, and it's looking like if you type in Facebook stock, you'll see our video. So that's good.
Mm.
Yeah, never done a live stream, but we're going to make this a weekly occurrence.
Yeah, yeah, yeah. That's the goal. Do it weekly. You guys can ask questions. We'll talk about stuff. Because I do get a lot of message. People ask me, "What do I think of this? What do I think of that?"
Yeah, and we can chat about literally anything investing related. So
Mm. Mm.
yeah, Baba's down 6% today. P ratio trailing 12 months is 16.
16.
16, yeah.
Damn.
Very interesting at that price. Yeah, it's wild. 16 PE.
Yeah. Oh, hello. I'm social.
Hello. So what other stocks have you been looking into then, Wes?
What I've been looking at. So I've been just trying to find some UK investments, really. Um, I think what I actually haven't I can't remember their names, but I've just been trying to screen for some UK companies.
Okay.
But yeah, I found a car company, a car like dealership, I think. I don't know what it's called in the UK.
All right.
Um,
Okay.
yeah, and what else? Not much really. There's not much like companies that's caught my eyes recently. What about you?
Yeah. So I'll get my watch list open.
What are your opinions on Amazon's earnings?
I haven't really looked, to be fair, because the main reason because is I think it's overvalued. So
Mm.
to me,
I
look,
looked
if you
at it.
get
I mean, it looks pretty good to be honest. The earning was good. Didn't most of it come from like the bitcoins? Not no the Bitcoin, the Rivian sale. Sorry,
oh really? I didn't.
I think
Oh,
so.
yeah,
I don't
because they
know.
had a stake, didn't they?
Mm.
Yeah, no, that would have been quite clever to boost her earnings by selling Rivian.
Mm. They were projected like 3 point something in earnings per share. They got like 15 or something.
Oh well.
Yeah.
Yeah, I don't really look at quarterly stuff often, to be honest. I know
Mm.
quite a few people love looking at the quarterly earnings, but in
Mm.
the grand scheme of things, what happens each quarter, I only care about the yearly earnings because
Mm.
things aren't going to change that much in a quarter that I need to know about.
Mm.
It's a warm fuzzy feeling if my company beats earnings, but
Mm.
my Excel sheet isn't going to change too much, is it?
Mm.
Yeah. Yearly is definitely better in my view.
Yeah. A lot of companies don't really like the quarterly earnings thing because it puts them pressure in it to beat top line and all that
Well,
stuff.
quarterly is more of a US thing. In the
Yeah.
UK, it's not as UK is more of a 6 monthly thing, which I
Mm.
think is more sensible.
Yeah.
Each quarter, let's say if your revenue's down, you have to really explain it, and
Mm.
all sorts of things happen. Each quarter, it means you've got to prepare the accounts 4 times a year,
Yeah.
and it's just like it's a bit unnecessary. So if you did it every 6 months, they
Mm.
could maybe focus more on running the business properly instead of worrying about what earnings they're going to have every quarter. But that's just my view. I just
Yeah.
look at it logically. I think one year would be too little. It'd be like, oh, we'll see you in a year's time. But each
Yeah.
6 month period is quite a good period to analyze what's going on in the business. Whereas I think
Yeah.
3 months isn't long. It isn't long, really, is it?
Mm.
I don't think it is anyway.
Mm. Yeah. What companies have you been looking at then?
Yeah, because I sent you my watch list.
Yeah.
So what have I been looking at?
Are you look
I've
Adobe,
got
right?
what's that? Sorry,
Adobe, isn't it? Is that the one?
Adobe. Yeah, so Adobe is one of the top ones on my list. It does need to drop a fair bit, but Adobe is probably one of my favourites.
Mm.
I know I've got Salesforce on there as well. Um,
Mm.
I know you like Salesforce as well.
Yeah.
Them two are some of the highest quality out there, but I would like to see them fall a bit. In terms of what's near, 3M's getting close. I know
Mm.
when we were chatting, your valuation of 3M's a bit different to mine. I think we
Yeah.
realised it was down to the discount rate.
Yeah.
So for me, I'd be quite happy at 140,
Mm.
which is only about 10% drop from here. Which, if you have a bad earnings, that could easily get to that. So
Mm. I actually forgot what my price was for 3M. I think it was like 120 or something,
yeah,
110.
it's like 120, I think,
Yeah.
from memory. Yeah, I think you did a post, didn't you?
Yeah.
So yeah, I've got a few others on there, but a lot of them do need to drop a little bit.
Mm.
So yeah,
I think
we'll just
I'm
have to
going to
see.
do a post on Adobe. I think I might do a post on it. Not sure yet.
Yeah, go for it.
Mm.
It's clear that it's a good business.
Mm.
I've got my actual analysis here. So their net profit margin, like 5-year average, is 28%. so that's solid. Return on equity is 36%, which I like to see above 15%.
Yeah.
So that's absolutely crazy. They don't have much debt because they're so profitable that they don't need debt to grow the business. They can use the profits.
Yeah.
So they've got 24% debt to equity. It basically means they don't have much debt compared to the size, which is spot on. It's clear that the revenue growth has been really good. They don't pay dividend yet, which makes sense. It's a software company, technology company, trying to grow the business, but they want to use the cash to pay shareholders who want to grow the business. So yeah, it's everything I look for. I wish I was 10 years. I don't wish I was 10 years older. You know what I mean? I wish I was investing 10 years ago when I was like 13. I would have bought already.
Yeah. Right now, I think it needs to fall in half to be considered a good investment, doesn't it?
Yeah. 56% for me.
56.
So
you might have the same valuation as me. I need to check.
Yeah, mine's 225. But the only way that's going to fall 50% is if there's a crash. Let's be honest.
Chris Hannings, poor guidance.
I don't see it falling 56% still. I'd love it.
Yeah.
But yeah, no, one I am happy about is Activision.
Yeah.
Because I know Microsoft are buying Activision now. But I thought that was a quality business. And Microsoft coming in and probably paying a bit over the odds for Activision. But as a shareholder, I'm happy because, you know, I'm going to get a decent return on my Activision shares. So it's not too bad.
Trying to bring up my Adobe valuations. Are you keeping shares then?
Yeah, I'm going to keep them because Microsoft are buying them for $95 per share. It could actually be a bit of an arbitrage play. So if you look at Activision, I think the share price is about $79.
Yeah.
So if you bought today and then Microsoft does buy it for $95, you'll have gained like $15 on your shares. So I think the market maybe thinks the takeover won't go through, but I personally think it will. I think Microsoft will get away with it and we'll get it across the line.
For some reason I can't bring up my Adobe. There we go. Right,
Yeah, one thing I do every now and then is I scan through the super investor list, be it like the big hedge funds, the big billionaire investors, so Warren Buffett, Howard Marks, Seth Klarman, and then you read Galloway's development. I just found it interesting to see what they own.
Yeah.
Because if these very smart people own a certain stock, I kind of want to pick away at why they own it.
Yeah.
And sometimes I don't get it. Like, I think one of them was Bill Ackman owns Domino's Pizza.
Yeah.
And I kind of get it. It's a big brand. It's profitable, but it's got loads of debt. Like, you know what I mean? And the valuation, like, So let me just type it in. Actually,
When did you buy into that though? Could have been,
it could have been years ago,
yeah.
and that's the thing. DMG. Dominoes. I think it was one of the best performing stocks of the decade. You know,
Oh really?
DPG.
Oh.
Yeah, if you do the max chart from 2010 to 2020, I can do it on Yahoo Finance. Yeah, it went from about $8 to $400 in 10 years.
Hello.
Hi, Raj. Yeah, we don't have any questions on YouTube at the minute. It's all on Instagram. Hi, Raj. How you doing? So yeah, Domino's Pizza. It's got a P ratio of 33.
Oh, that's a bit too. Yeah.
So,
Is it growing faster?
let's have a look at financials. Not really, no.
No.
So 2018 it was 3.4 billion revenue. 2019 3.6. Then 2020 was 4.1. So it's not like it's
No.
mega. So cheers, Raj. Appreciate that. I'll take the compliments. Yeah, I look trim in person, so hopefully for the next London meetup I'll be nice and trim. I keep getting loads of bot accounts in the comments.
Oh really?
On the YouTube ones, I keep having to block them. I have as well.
Oh yeah, one thing. Oh yeah. So yeah, talk about your investing process then.
Ooh, great question.
Yeah. Like, what do you do? Like, say that you found a company that you like. What's the process in like, looking at it before you click the buy button?
Yeah, it's a great question. So, whenever look at a company to start with, the first thing I do is just let's say I just find an idea. I'll go to the free cash flow section and I'll go to the latest free cash flow, be it trailing 12 months or the yearly one, and times it by 20 to get a feel, if you know what I mean.
Yeah.
Because I can quickly do that on my phone. And then I get an indication of how overvalued or not it is. Because most of the time, if it's horribly overvalued, I'll just won't even bother. But yeah, in terms of like, if I do a deeper analysis, I kind of like a 4-pillar process, basically. I know we both like Everything Money YouTube channel. Their 8 pillars is absolutely solid. And to be honest, I could just use that, and it would be very similar. But I've picked up things from stuff I've read, a few books I've read, and other YouTubers where I'm like, yeah, that makes sense. So the first thing I look for is I want a company to be like profitable, high returns on capital.
Why does it have to be profitable?
For me, I like it to be above 40% gross margins or above, or 10% net margins. Some businesses do better than others, so your Facebooks and your Googles are going to be really profitable, but then lower margins is like your Walmarts, vanilla in some ways. So sometimes it's not comparable, but we can all agree that if a company makes no profit, it's a better business model. That's just my view anyway. So yeah, generally stuff I'm looking for is really high profit.
Mm. So why
Because
don't you invest in? No, go on.
no, I was just going to say, in my head, it makes sense if, let's say, Facebook, for
Mm,
every £1 they sell, they make
mm,
33 pence in profit, which
mm,
is just ridiculous. So
yeah. So why don't you invest in companies that don't make money or have cash flow? What's not appealing in terms of those companies? Why don't you invest in those ones, even though that they might be good for the future?
yeah, so for me, I'll look at a stock as if I was going to buy the full business itself.
Yeah.
So let's say your mate owns a garage, a car garage, and he wants you to invest 10 grand,
Mhm.
or however much you can say. What would you want to know? You'd want to know how much money it's making. You'd want to know what debts the business has or the
Mm,
potential partner has.
mm,
You'd want to know all these different things and you'd scrutinize it. So
yeah.
one thing I personally think people get wrong is they don't do that when looking into stocks. And it doesn't
Mhm.
even have to be mega complicated. You can have, say, 8 things you look for,
Mhm.
and if it ticks all the boxes, boom,
Mhm.
buy it. So that's kind of what I do, basically. Keep it as simple as possible.
Mhm.
You know, can relate to property in some ways. Like, I wouldn't buy a property which didn't. Would you buy a property which lost money each month? Because I don't think I'd want to. So if you buy a company which has never made a profit before,
Mhm.
it's just too risky. So
Mm. Do you think the people who buy companies who are not profitable, do you think like why do you think they do it? Is it because it's the story of the business is exciting or what?
yeah, no, it's a good question because people get investing in stocks for various reasons.
Mm,
Um, well, most people are well, we're all in it to make money, invest in the stock market, aren't we? Let's be honest.
mm,
It's what we want to do stuff with our money, want to make it work for us,
mm,
which is great. But there's a way of doing it,
mhm,
and there's a way of doing it which is like gambling.
mhm,
Then there's a way of doing it as acting like a business owner and
mhm,
owning the stocks for long term.
mm, mm. Yeah, because a lot of people yeah they just got caught up in the in like companies that don't make money. Like, I mean, there will be a time when you get to own these companies, but let them prove themselves first. But that's hard, really, and you just have to think like a business owner, as you say. Like, someone offers you to buy a company, you're gonna ask them how much does it make. That's probably the first thing you ask them, but a lot of people don't ask that question.
Yeah, a lot of people get hood up about the story. So let's
Mm.
say Tesla is a perfect example. Tesla is a fantastic, I think it's a fantastic company, doing good
Mhm.
things. They're bringing on the production of electric vehicles. Because if it
Mhm.
wasn't for them, the other car makers wouldn't have bothered, probably.
Yeah.
I think it's fair to say.
Mm.
They have good product, really good car. Yeah,
Mm.
I've never been in one, but I've been told they're quite nice and stuff.
Yeah.
But just because of all that, it doesn't mean you should go ahead and buy the stock.
Yeah.
So that's where people go wrong, unfortunately.
Would you buy the stock at this price? I mean, they're gonna bring out robot taxis. They're gonna do loads of stuff like in the future. Would you actually buy the stock now? Because I know a lot of people who actually got in because of all these things that they're mentioning, like the robot taxis. They're gonna do this. I don't even know what they do anymore, like solar panels. So would you invest in it because they're doing all that kind of stuff?
Personally, I wouldn't. No.
Mm,
Um, I've I've got a list of company types I would never invest in anyway, and car companies are one of them.
mm,
I just don't think they're very good businesses, personally,
yeah.
from what I've seen.
Mm,
But in terms of Tesla, it's a car company. Um, they make cars, electric vehicles. On the side, they have the solar roofs. They have
mm,
whatever else, but they're just a car company at the end of the day.
mm,
Same as Toyota, same as Hyundai,
mm,
Volkswagen.
yeah. I think one day we will own Tesla shares, but not this price.
Yeah, no, personally, I don't think I will.
Yeah, because
Uh,
you don't invest in cars. Yeah, just yeah.
car companies,
Yeah.
I've got a few sectors that I just completely avoid.
Mm.
So banks is one of them,
Mhm.
and banks and insurance are classed in the same bracket.
Mhm.
Very complicated, and there's a lot of risks behind them that
Mm.
like people like us just don't understand.
Mm.
Like banks, for example, they have derivatives and options,
Mm.
currency risk,
Mm.
and it's enough to boggle your head.
Yeah.
So they've got risk which isn't shown like on the balance sheet.
Yeah.
I know for me that's something I don't really want to deal with.
Mm.
So utility companies and telecom companies
Mm.
historically just have lots of debt, and what part of the process is they don't want lots of debt, so just avoid. So AT&T, Verizon, T-Mobile, BT, I just will never own them
Yeah.
because they're just, in my opinion, they're just not good businesses.
Mm.
And then I've got a few others. So real estate, I don't really want to own REITs
Mhm.
because I'd rather own property in my own name because of the
Yeah.
benefits. So, and the other one is retail.
Mm.
There's the odd retail. I don't even class Walgreens as retail because I class it as more of a pharmacy, but
Yeah.
let's say a Debenhams or something like that, or an ASOS, it's not something I personally go for.
Mm. One thing I wanted to ask you, so you know, it's all like the discussion is all about like inflation, and people are saying you got to go to like banks, energy, commodities, and all this. Is that something you're gonna do because there's like this whole talk of inflation, or you're gonna change the way you invest, like tweak your portfolio, or what's the plan?
Yeah, so I don't agree with people tinkering the portfolio because I think interest rates are going to go up or down.
Mhm.
I think if you're investing in stocks, you need to be investing into a business, no matter what the interest rate environment is.
Mhm.
And I think it's a very risky game to all your life invest because what interest rates are doing.
Yeah. Yeah.
Warren Buffett has said it. You
Yeah,
can't
I
predict
made a
them.
post. Yeah, I made a post about it. Like, no, I actually watched the video. Buffett said he's never really like changed his way of investing because of like interest rates, whatever is
Yeah,
going on in the world. He just wants to look for quality business at a good price. And yeah, I agree. At first, I wanted to look for companies, you know, to go along with like what the current market was. But then I thought about it. Then I just thought, no, I'm just gonna, you know, stick with what I've got and just
yeah,
invest the same way without changing too much. Because if you do change a lot, you're probably gonna start underperforming,
yeah,
and you're gonna
that's
start investing in business you don't understand. Like for me, really, I don't really do REITs like energy, like commodities and all utilities. So I
yeah,
just kind of like avoid them, to be honest.
yeah. No, you do right, and you have your list of stuff you're not interested in. I do.
Mm,
It doesn't mean we're right or wrong, but
mm,
we're comfortable with that, and that's what the main thing is.
yeah,
So
yeah. Because I see a lot of people there. They're going to like banks and stuff like that because of the interest rates. Like some people are going to like JP Morgan and all these banks. Like banks are really hard to kind of understand. So I don't think you should start going to these sectors like energy. Yes, it's gonna in the short term it might help boost your portfolio, but then you also have to think about the long term as well. So for me, I prefer to just stick with my investing like philosophy and don't worry about what the macro like factors going on in the world because
yeah,
these things come in cycles.
yeah. Pay attention to it, but don't let
Mm.
it rule your life.
Yeah.
You can't predict it. You can't predict what interest rates will do, inflation will be.
Mm.
Have a process which works for all of it. And
Mm.
the way we're investing does work. It's worked for Warren Buffett since the 1950s. So
Mm. Yeah. Yeah, so yeah, if anyone's like worrying about you gotta own bank stocks or commodities or energy, just yeah, don't worry about what the world's going on. Just stick to your method and don't let anything like tweak the way you invest, or that's when you're asking for trouble.
Yeah, 100%. Get a process and stick to it. Really.
Hmm. Yeah.
Yeah, I'm always looking at new stocks to invest in. Though I find it
Mm,
interesting. Like, there's a few companies which a business model I'm liking is professional services. So
mm-hmm.
there's a company called Accenture, and
Oh,
there's a
yeah.
company called Willis Towers Watson.
Hmm.
So I'm looking into them. They're not good valuations, but
Yeah.
it's for the future. You know what I mean? Looking at
Mm,
the business models and being like, right, okay, so if this gets to a good price, it might be something worth looking at.
yeah.
So yeah, I'm always looking. But with a few, I've gone probably. I haven't gone through all the S&P 500, but probably the S&P 100, so the biggest 100 I've gone through, and I could probably just tell you yes or no for whatever reason.
Yeah. Yeah.
I can do it now if you want.
Right then, go.
S&P 500 list.
It's weird. Like, if someone would tell me, "Is this stock a good buy?" I'd probably say I could probably just think in my head yes or no. Like, you just have a
Yeah,
feeling
me
it's
too.
overvalued.
Yeah, so there's like two ways of looking at it: good company, and then valuation wise, because
Mm,
there's a lot of them which are good companies, but a lot of them are just not a good
mm,
valuation. So
yeah.
like Apple, for example, like I'm sure we can probably agree it's a good company.
Yeah.
Personally, I don't want to own it. There's a few reasons why.
Mm,
Um, and it's related to the balance sheet. But
mm-hmm.
it might be me being stupid, but it's not something I'm. When I look at them, it's happened to quite a few companies. So Apple generate
Mm-hmm.
a lot of cash. But one thing, if you see the balance sheet, is the long-term debt figure just keeps going up,
Oh, yeah.
and it's because Apple do this funky thing where I don't know if you've seen it, a way to dodge taxes. They
Mm,
send the money to Ireland, then it goes to Holland, and then
mm,
it goes to Guernsey or Jersey.
mm-hmm.
And by doing that, they get away with not paying some tax.
Mm,
You can Google it; it's all out there, and there's
mm,
been like law cases on it. But basically, I think what they're doing is they're borrowing. So they've got the cash sat there, but they've
mm-hmm.
got the debt at the other side. So
Yeah.
they're doing something funky to,
Mm.
yeah, it's just something I'm not keen on,
Yeah.
basically. And it just puts me off.
Mm,
Starbucks have done it as well. If you get Starbucks and look at their long term debt over the past 5 years, it's just big.
mm.
So and borrowing money to buy back shares. So yeah, I could go on all day about this.
Mm, mm. Do you use like FinViz or something to screen stocks? Or
I probably should, to be fair,
mm,
in terms of like stuff I'm looking at from a YouTube channel.
mm,
Um, I've just used Yahoo Finance, but I probably should. You should link me to that. I'll have a look.
mm-hmm.
There's some like
Definitely.
unknown ones.
Mm. Yeah, I found a few unknown companies on FinViz. It's a pretty good site for screening stock.
Yeah, I'll have to have a look because yeah, if I had more time, I would look at small caps, but
Mm-hmm.
it's it's you've got to put a lot of time into small caps because there's a lot of risks again.
Yeah.
Because the reason why small caps are quite good is because big analysts aren't looking at them.
Yeah.
So
Hello, lifting teacher.
hello, lifting teacher.
You got any questions, lifting teacher? I know you always do.
50
When did we start? Like, when did we start?
minutes ago it was now.
Yeah, 50 minutes ago.
Yeah, this one's been our kind of pilot episode.
Yeah.
I think it's gone well. Well,
Yeah.
what we'll have to do is each week is we'll have to pick, say, 4 things to chat about,
Mhm.
be it one stock, one
Mhm.
investor, whether it's like Charlie Munger or Warren Buffett. And then I've got a question. Ask some questions as well.
Someone said, please talk about Meta. Will it recover? What's the future?
I think it's off to zero, to be honest.
I think, like, what price did you get in on Facebook if you hold it?
Me or for
No, this comment. Like, what price did you get in on Facebook if you hold it, Nit? Because for me, Facebook is a, good company. I think it's an overreaction. I think you'll be fine.
Yeah, I'm not too worried, to be honest.
Yeah, I mean, you have to take the short term, pain for the long term. But I think, it's a good investment. But if it does get too much for you, you know what to do. Well, I have 1,000 questions, but first of all, thank you for your private chat. I really appreciate them. No worries, anytime. Looking at 200 leap and maybe selling 250 calls a few months out. Do you know anything about leaps and calls?
I know nothing about options personally. I don't really have to cap. No, I don't really have to capital to like go into options. But all I do know really is, from what I've seen money has said, is to do something with options to generate an income, but get a stock at a certain price.
Yeah.
Which I think is quite clever if you've got like a lot of capital. But my portfolio is like 15 grand. So and to have options, I think you've got to have 100 of each share. So it's something I need to learn. I think in the future, 100% look into it, because if you can buy stocks at a certain price but still generate an income, that's quite powerful. So add to your returns.
It's a clever thing, really.
100% it is, yeah.
Okay. What's your questions, Lifting?
Yeah, it's wild with Facebook because even if they grow from here 10% a year, it's still looking like a really good deal.
So, all right, Lifton said, so I bought Crocs, Corsair, Meta, T-Row, PayPal, I'll stay on the sideline. What do you think about my picks? All right, let's go with Crocs.
Crocs, let me type Crocs in.
What price did you get Corsair? Because I own Corsair. It's a small part of my portfolio, though. I think it's like 5%.
Did you know Crocs has got a P ratio of 9?
Yeah, it's skewed.
Is it because they had a good year?
Yeah.
Okay.
Look at the cash flow as well. It's like steady, then it's like quadrupled in 1 year or 2 years.
Oh, wow, okay. That's strange, isn't it?
Yeah.
Yeah, that's obviously good for Crocs, but that would kind of put me off, if you know what I mean. Because you don't know where you stand with the numbers.
Yeah. I normally go by the year before they had the big breakout. So if they had it in 2021, or I go the year before that, or what year did they have it?
So in 2018, free cash flow was 102 million. Then it was 54 million, and then it was 225 million.
Yeah, probably got
it's like and then trailing 12 months it's 400 million. So just don't know where you stand. It's like I'd rather it be like steady, but steady upwards. I know that might be boring, but you know where you stand with a company.
Corsair. I mean, it's a good company. Like I bought them at like $19, so good long term play. Like it's not a big part of my portfolio. It's just like small, like 5 to 7%. I like them.
How much have they grown quite a bit?
Yeah, I think they're fast growing. Meta,
our favorite.
yeah. I mean, you can't. I mean, it's at a good price right now. Meta. I've actually doubled down on my position with Meta. T Rowe. What's T Rowe?
T Rowe Price is an asset manager, I believe. It's a bit like Clara.
Okay.
I might be totally wrong. Investment management company.
PayPal. I'll stay on the sideline. Okay.
Yeah, we discussed PayPal, and I'm not a fan at all. I still think the valuation's got a fair bit to go before it'd be a good price.
Yeah.
I watched a video of Sam Carlin, and he brought some decent points about how people using PayPal, a lot of them just want to stop using it because of the high fees, because they feel forced to use it.
Yeah.
There's stuff like transfer, so TransferWise, their fees are like minuscule for like currency transfers, whereas PayPal are really big. So PayPal's a business; it's a fintech business, but it could get competition could eat it away.
Yeah.
So
very competitive, that industry, isn't it?
It's dog eats dog, or whatever it is. Yeah. And the margin's not even that impressive, to be honest.
Oh, really?
If you look at Visa and MasterCard, there's like 50%.
Hello, Fergie.
I'm Fergie.
Yeah, but lifting, I like Corsair, Meta out of those picks. PayPal's all right, but you have to get it at a cheap price.
Yeah, anything at a cheap price is better than nothing. Yeah, I don't know how long you want it to go on for. We've been on for an hour now, so I don't know if the Instagram live is the same. But...
Lifting, you got any more questions? Or anyone else? But I think a lot of people got burned with PayPal because everyone was buying it at like 180, 170. And it's like 120 something now.
Yeah. Well, yeah, it dropped quite a bit, but even from current valuations, I think it needs to drop a decent amount.
Yeah. What about Square? What do you think of Square?
It's another one where I just think Visa and MasterCard are better. They might do slightly different things. But yeah, I just look at the financials and I'm not impressed, really.
Yeah.
How about yourself?
Square. I mean, it's all right. I mean, but the fundamentals don't look too great at the minute. Like they're diluting a lot.
Yeah, that's something I actually hate. It's the share issuing.
Yeah. Any question, guys?
Yeah, I might have to call it a night there.
Yeah.
Anyway, yeah, no, it's been good. We'll have to keep doing this once a week. We now know how to set it up properly. So
yeah. Technical
took me 5
issues at the
minutes
beginning.
to add you in.
It's good.
But yeah, we'll pick 3 or 4 topics next time. We'll pick a stock, a few other bits and bobs, and then any questions we'll go for it, and we'll just keep doing this. Hopefully people enjoy it.
Yeah, it's good. Yeah, if you got
Anyway,
any questions, you can message either of us, and yeah, we'll get back to you. But yeah,
in
thanks
voice
for
notes.
watching.
It'll be in voice notes, by the way, because I don't like texting.
Yeah, so if you're shy with the voice notes, yeah.
You can text, but I'll just speak to you on voice notes.
Yeah. All right then. Thanks everyone.
Nice
And
one.
see you next week.
Cheers, guys. I'll see you next week.